Good evening and welcome to today's installment of the Private Property Podcast. I'm your brand new host, Sibs Matiela, looking like a rich beep in my fur today because all I want is a very nice property to own, which is why I have a guest today, Kamini Ramsamy from Absa, who's going to tell me all about bond applications and good credit scores. But before we get to that, I must remind you that all roads lead to the property show.
This year, we're back in real life and virtual with content generated in our metaverse studio. We've designed the exhibition space to replicate the world's most popular property game and added in activities for the whole family, including an indoor park and play area. The game board is divided into 4 journeys, namely First-Time Homebuyers Boulevard, Investment Avenue, Sellers Street, and Renters Road. Visit thepropertyshow.co.za for more information and to get your tickets today. The Property Show 2022, 27th to the 28th of August at the Sandton Convention Center. No matter where you are on your property journey, we've gathered the experts.
You heard it here first. All roads lead to the property show because at privateproperty.co.za, our aim and our goal and our heart's calling is to connect you to the heart of property, which is why we're having the show. And you should be there. If you click on one of the links in the comment section, you should be able to find a link to go and purchase some tickets. Or if you interact on the comments section on today's episode and you're the best person at it, then you'll probably win a ticket as well, which I'll announce, tomorrow. It could be you. You could be the lucky winner. Otherwise, we'll see everyone at the property show on the 27th and 28th of August 2022 at the Sandton Convention Center. If you cannot be here in person, you can join us digitally and virtually from anywhere in the world. Back to today's topic, though, we are talking about why you need a good credit score, and if you don't have a good credit score, how you can improve it very, very quickly. We're speaking to Kamini Ramsamy from Absa. Kamini, thank you for joining us.
Thanks, Sims. Thank you for having me in studio.
Please tell me about your role at Absa, what it is exactly that you do.
So I look into the application process of the home loans. When a customer comes in to apply for a home loan, I look at the risk of the customer, what pricing the customer should get, essentially the interest rate. Should we decline the customer? Should we approve it? Should the customer be referred to somebody a bit more, manual sort of process? It's pretty much the home loan, the bond application process that the customer walks through.
So how can Absa help customers when it comes to applications now on their buying journey?
There's a number of things. So I guess the first one is we've got My Home Journey, which is a free e-learning platform that customers can get to know the ins and outs of home ownership. And I guess all the sort of intricate questions around home ownership. The second one is we've got a knowledge hub on the internet. So if you go into Absa.co.za, you'll find a whole lot of questions, frequently answered questions and around home ownership. We've also got the bond calculator. So when you're applying, you can go through the bond calculator, which tells you your installment. It gives you a breakdown of your cost, your attorney cost, your transfer cost, and we've also got it's a provisionally approved light application. So if you haven't yet found the property and you want to know if you're good for credit, then you can go through that process. You'll get a certificate to say you are good for a certain amount, which you can then take to the state agent to say the bank has provisionally approved me for this amount. And we've got a very simple digital home loan application, which is called Digital Sales Platform, which has got very simple, quick questions as part of a full application. So we walk the customer through the homeowner journey and guide the customer during the process.
Kamini, I grew up in a home where my parents were very paranoid about something called being blacklisted. So they were very meticulous about paying their bills on time, and I've never understood it. What is being blacklisted and how does it happen?
So blacklisted is actually a very, very old traditional term. And blacklisted comes from the credit bureau. So you have this negative sort of connotation of the credit bureau. Blacklisted actually means somebody who is forbidden, somebody who is banned.
So not negative at all.
Yes. So I think that credit bureaus have actually come a long way. Credit bureaus don't really have only negative information, And strictly speaking, if somebody is blacklisted, then they're not allowed to apply for credit. And if they do apply, they will get declined. Now, if you take something that's quite adverse, like a judgment where you're meant to pay a certain service provider, whether it's a doctor, whether it's a bank, and you have not fulfilled that, then they can take legal action against you. Now, that is seen as something quite adverse, like a judgment or a default, and that generally is what we term blacklisted. Now, that stays on your profile for a number of years, so there's like a retention period. And even though you settle or you pay that, that will still stay in your profile. Now, every now and then in South Africa, you get what we call credit amnesty, where if you have paid a judgment or a default, then essentially that is removed from your profile, even if you're still within that retention period. So that's essentially blacklisted. And just remember, we've got about between 16 to 18 registered credit bureaus in South Africa as part of the Credit Bureau Association. And they all have to adhere to the guidelines of SACRA, which is the South African Credit Risk and Reporting Association. So when it comes to things like blacklisting, the retention period obviously is very, very consistent across the credit bureaus.
Okay, sorry, I have to ask this. Does it mean that, not that I don't pay my TV license, I pay my TV license, but if I didn't, for instance, pay my TV license, would I be blacklisted?
If there is a legal action that's taken against you.
So if like the people from Telkom are phoning me and they're saying, hey, you didn't pay your bill, and I'm like, I didn't owe you for that month, and they're like, we're going to call our lawyers, does that make me blacklisted?
They will raise a dispute against you. So you'll have a dispute flag on the bureau.
Okay.
Yeah.
I can't think of any other scenarios, but those are just the ones I've heard of.
Yeah.
What information does a buyer need to be able to apply for a bond?
So when you're applying for a bond, the first thing obviously you need is your offer to purchase, because that shows that you've put down an offer on a property that you like, your dream home. And with that, you need some personal documents, you need your ID, you need 3 months bank statement, 3 months payslip. And what I would also advise is, before you get into that bond application, go and get your credit report. So you're allowed one free credit report at the bureaus. Get your credit report, have a look at how the bureaus see you, because that's how the banks are also going to see you. And check if there's anything that's not correct on that credit report. So if they have your gender incorrect, if they have you with 10 children, 10 dependents, if they've got you with multiple accounts and you don't even have those accounts, then contact the bureau. If it's not correct, get that corrected before you get into the bond application. Once that's all good, then sit down, tabulate your income, your expenses. For all of your debt, you need to put down exactly what you're paying on a regular basis. Because when you apply, the banks are going to go to the credit bureau. They are going to see exactly what you're paying. So you cannot understate your expenses. So put that down, and then you can proceed with applying for a home loan application. Also, just make sure you got the property details on hand. The address of the property you're buying, the current owner of the property, so the owner's name and ID number, get that on hand as well. And then you can proceed with your bond application.
That's so interesting to me that the offer to purchase comes before the bond application, because one would think that it would be the other way around.
So if you
secure the money first, and then once you have the money, then go about asking the nice people to give you the house.
Look, usually if you want to know if you're good for a million bond, then you go through a pre-approval process.
Got it.
And then you see, okay, I've been pre-approved for $1 million. Mr. Estate Agent, here's my certificate from Absa. Absa approved me for $1 million. I'm good. I'm serious about this. Then once you've got all your information, your documents, then you can get into a full bond application, and then you apply from there. Okay.
If I get a bond, again, I'm asking for a friend for like $1 million, and then like I want to go to Vegas or something with that money. Like, does that happen?
No, not at all. Remember, you go through it's quite a robust process, this whole bond application. As soon as you get approved, you then have to state your intention. Are you going to take it up with the bank? So if you apply with a mortgage originator, then they will submit your application to multiple banks. They come back with offers, and then you're going to say, I don't want to take this up. I'm going to withdraw completely, or I would like you to instruct the attorney. I like Absa's offer. And then you instruct the attorney, and the attorney starts with the process, the whole bond registration, the transfer of the property from the current owner to you. That whole process starts. So you can't, Absa's not going to pay you out, and then you have to go through that entire process. And generally it takes 2 to 3 months anyway before the bond is registered, the deeds offers.
So no one's going to Vegas?
No one's going to Vegas.
Got it. What are the benefits, would you say, of having a good credit score?
Look, you are seen as somebody who can manage your credit. You're seen as somebody who can demonstrate I've got a whole bunch of accounts, and I'm paying this on a regular basis. So it just shows good credit management, and that's what financial institutions are looking for when they are lending out money. They're looking for someone who's able to manage their credit, that displays they can make these frequent payments on a regular basis.
So say I haven't, not me, say my friend hasn't been paying her TV license and the cell phone contract provider or something. I'm guessing, these are all examples, I'm guessing. How would they improve their credit score?
So there's a couple of things. Okay, well, the first one is just, they should have paid. They should have
Pay your
paid.
TV license.
They should have paid their bills. I guess that's the obvious one, because that's actually seen as I cannot pay my existing loans, but I want more debt. So of course your credit score is going to be low. So see the credit score as the better you are at repaying your debt, the more points you get. The higher the credit score, the really good you're seen as a good customer. Now, obviously, the customer needs to rectify, needs to make the payment. The other thing is they must not take a lot of loans in a short period of time.
Okay.
So if the person is taking maybe like 3 personal loans, a micro loan, a credit card in less than 6 months, that also reduces your credit score.
Got it. So if you've got like an overdraft and a credit card and a personal loan and
vehicle finance,
vehicle finance, and that's
in a short period of time.
Got it.
And the other one is utilization on your revolving accounts, like your credit card. So if you've got really high utilization, you've almost close to that max limit. That's also not seen as something positive. In a short period of time, you've really managed to utilize a lot of credit. Look, I know that pre-COVID, you didn't really get too many high utilization. If people utilized then and it was quite high, they were seen as your bad customers.
Yeah.
Now post-COVID, everything is digital. I mean, you can buy clothing online, food online, kitchenware online. Everything's just online, and people tend to go a little bit overboard on their credit card. So utilization and how much you spend, just watch that. Make sure you make your regular payments towards your credit card, because that can really skyrocket.
So it wouldn't be bad if I like max it out, and then like when I get paid, then I pay it.
So you're seen as a transactor. So if you max and then at the end of the month you completely pay that down, you're seen as a transactor. So that's generally what I do. I like spend a lot every month, and then I ended up paying everything down in the month. That's good.
Because sometimes the sale can't wait. Sometimes the discount is then and there, and you've got to buy the thing, and then you'll pay it back on payday.
Like Black Friday is coming up.
And all our credit cards are ready. I don't know if we should have qualified for them in the first place, but that's not what we're talking about today. Listen, which digital platforms are available where you can check and track your credit score?
So the credit bureaus all have got credit reports that you can go and download the credit report. On that report, you will see a score. Now that score is actually that credit bureau's generic score.
Okay.
And when I say generic, it basically predicts the likelihood of you not paying any loan. The banks obviously build customized scorecards that predicts, for example, a home loan scorecard in a bank will predict the probability that you will not pay your home loan, you not make repayment towards your home loan. So those scores that you find at the bottom of your report is very much generic towards any product. But if you get onto any of the bureaus, get your credit report, you'll see a score at the bottom.
What are the scores like?
The scores at the bureau are generally quite, they can range up to 1,000.
What am I looking for, rather? I think that should have been the question. Like,
Yes.
if I see like 100, I'm like, yeah, 100 out of 100. I have the best credit score.
Look, it depends. It depends on the bureau. So all the bureaus have got their own generic scorecards. So you're typically looking at an origination score, which is basically tells you how you're going to repay a new loan. Because you've also got account management scores, how you're managing your debt. Now, if you look at your credit bureau report, you'll see your originations, your new business score, essentially there. Depending on the score, the bureau, whether it is Experian, TransUnion, XDS, they've all got their own scorecard. So it's hard to say, for example, which. Depending on the bureau. So if you go to, for example, Experian or TransUnion, and the scores are quite high, close to 1,000, depending on the scorecard as well, because
Yeah.
they've also got different scorecards, Delphi scores, Perica scores, Credit Vision scores, and they've all got their own ranges, but they will tell you your credit health. So what they do is they'll say, they could either have a dial that will say your score falls in the high risk, it falls in the low risk, excellent customer. So they will tell you, depending on your score, where you fall from a credit rating. But I can't say
You can't say like
700
that is the
or
number that I'm looking
500
for.
because it depends on the bureau and it depends on which specific score. There's not one score for all the bureaus. They've all obviously developed their own scores because of competitiveness.
What common mistakes do you see when people are trying to improve their credit scores?
I think generally with the younger customers who don't have any credit products, usually they say, "Oh, I have to take on a lot of debt now because the banks don't have anything to go by." So they open up the credit card and the clothing account and a whole bunch of things. Look, I think the credit bureaus have come a long way. They have acknowledged, and the financial institutions, they have acknowledged this market, what we call thin file, credit invisibles, where they don't have any account. So they might have one account they open up in the last 6 months. So they have found ways of looking at those customers. So don't go and open up a whole bunch of accounts, don't ring up a whole large debt.
I think that's what they tell you to do, right? They say, oh, you don't have a whatever account. Go open it so that they can see that you can pay your bills. Otherwise, you'll never have a house. And then you panic and you go and then you overspend. And then it's a cycle.
Yeah, that was back in the day.
It's a toxic cycle,
Yes.
Kamini.
Definitely, yeah.
We need to end it. So what did you say? No common mistakes. What are the common mistakes?
So the one is opening up a lot of accounts just before you're applying for your home loan. And customers don't know that. So in banks, there's ways that certain banks treat what we call thin file, the credit invisibles. So there's other information they can look at besides looking at bureau, because the bureau is not going to have much. Some bureaus do develop thin file scores to see how they can look at thin files, how to assess them better. So there's quite a few bureaus that actually have that. Actually, yesterday I attended a financial summit hosted by TransUnion, a fantastic summit, and a main part of their summit was around looking at the underserved market, the credit underserved market, the thin file customers. They've introduced things like those thin file scores that you can use to assess those customers. And the other bureaus also have got something similar. So they have definitely come a long way. The banks generally use that and other information about the customer from the application to make a better assessment.
Sorry, I'm glitching because I'm thinking of all of the unnecessary clothing accounts that I've ever opened in my life, but it's fine. I'll use the credit card now. Listen, while most creditors define their own range of credit scores, which we have touched on, what's the average score range that's usually used?
So again, depending on the bureau. So remember, if you're using a bureau score, like I said, it's a generic score, and a lot of the bureaus have got a max could be up to 1,000, up to 800, up to 750. So I have seen a lot of the high scores coming from the credit bureau scorecards. But the bank will use that in conjunction with their own customized scorecards. For example, on a home loan, you build customized scorecards, which tells you the probability of you not paying your home loan. So you will take that score, you will take the bureau score, and then you'll see how to rate the customer in terms of their credit quality.
Okay. So different numbers depending on the bureau, depending on the bank, depending on...
Different numbers. Remember, like if I think now to applications, the bank's application scorecards, their max could be 250 or 300. Very different from the credit bureau. So it really depends on the score. Each score has got a name. So if it's a bureau, that bureau's got their own generic score.
Got you. How will a person's credit score affect the initial deposit that they make, given the bond application is approved?
So generally what happens is that credit scoring part, the looking at that score, actually starts in the beginning. So you want to get a good idea of SIBS. Let's look at SIB's credit score. We can see she's got a high credit score. We put her into a bucket. So maybe you've got 10 buckets or you've got 15 buckets. And those buckets will tell you whether you are low risk or high risk. And those buckets are also linked to the offer we want to put out to you. So it just links to strategy. Would we want to offer you
100%, yeah.
Or should you put a deposit down because you are seen as slightly higher risk? It also talks to your interest rate that we're going to offer you. So we have to price for the risk of the customer. So if you're seen as slightly higher risk, then generally you'll have to put down a deposit because you don't qualify for 100%. And the interest rates are also going to be slightly higher. Then we'd look at things like the affordability. So point in time, looking at your income, expenses. Can you actually afford this R1 million loan?
My thing is, and what did you call it? Thin line?
Thin file.
Thin file. I suppose I identify as a thin file person, right? But also, a lot of people are now self-employed. A lot of people post-COVID are working for themselves. They're working from home. They don't have the 3-month pay slip because it varies from month to month what you get in. You know you can meet your bills. You know what you can afford. And I'm sure that shows somewhere. But when it comes now to providing all of this paperwork and all of this proof, and then you look super high risk, I imagine, where it's just that you're not in the traditional structure of what a workplace used to be considered as, because we've evolved and we can work online and digitally and from anywhere in the world and do many things at the same time. So do people like that, do you think there's a bias towards them maybe, or like that really negatively affects their standing in terms of their risk profile and how they're considered?
Not really. So when it comes to self-employed, there are additional documents that they may need to submit. So documents around their company, how they're managing that, etc. So they're not generally seen as, it's not, they're all not seen as high risk. There's no
We're not
bias.
undesirables.
Definitely not. And they also have a bit of oversight to their application, so they could go through an automated scoring process, and thereafter it's sent to a manual sort of space where somebody is looking at that application in a bit more detail. So I really wouldn't say that they're all seen as high risk. Times have definitely changed, like you pointed out. But if you are getting an income, whether it's not the same every month, submit all of that to the bank. Obviously, the bank takes the average. It doesn't just take the maximum or the last pay slip or the last bank statement.
Or the 2 months you went without.
Yes, it'll take the average. The average.
I have a job now. It's fine.
Okay, cool. Yeah.
So it's fine. It'll be fine.
It's fine. Look, the bank obviously will assess what you have provided and make a decision from there.
Okay. What can the people coming to the property show look forward to from Absa?
So there will be a team, obviously, to guide the customers in
Will you
terms
be
of
there?
homeownership. I don't know if I'm going to be
I
there.
think you
I'd
should
love to
come.
be there.
It's going to be great.
Awesome. I'll
But you
definitely
tell me
try.
why it's going to be great.
Look, I mean, there's so much. So if you think about consumers now, I know the interest rates have gone up, but people have been on this property spree, and the market's great. I mean, the market's doing really well. So
Where are people getting the money, Kamini?
People have money. They've been saving up during COVID,
Yeah.
and now the fuel prices have skyrocketed.
It's Russia. Russia did this to us. Okay, so you guys are a proud sponsor of the property show, happening on the 27th and the 28th of August 2022 at the Sandton Convention Center. So you will have a physical stand there.
Yes, correct. Yes, just to help and guide customers on home ownership journey.
I'm looking forward to it, and I definitely hope to see you there. And I know everyone watching this will want to see Kamini there as well, because she's great and we love her. Thank you.
Thank you very much. Thank you for having me.
Anytime, please come back soon so we can talk more about those unpaid,
Yes, definitely.
the credit bureau. Yeah. Listen, it's time for the competition. $500 someone gets in their pocket today. Maybe you can use it to pay that account before they blacklist you at Credit Bureau, one of the 16 or 17 credit bureaus in South Africa. Mom, you're safe because you're retired now and you own your own house, so it's okay. Listen, Nemagovuni Cynthia, you have won. It's you. Go pay your bills, honey. You also get a ticket to the property show. So please come and join us at the Sandton Convention Center on the 27th and 28th of August 2022. We will see you there in a few weeks' time. I will see you tomorrow on the next episode of the Private Property Podcast.